to order at 4:03. Stand for pledge of allegiance. I pledge allegiance to the
flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Okay. This is our first meeting of the Elderly Tax Abatement Committee. And basically what I wanted to do is just get together the organizational background on what's going on. And I had a couple of questions for Marty. Some of the information we're going to be looking at has personal information. Are we allowed to go through this, and does it become FOIable, or where do we stand with that?
Well, anything that you're going to make officially part of the record could be FOIable, yeah.
Okay.
So, and I think, John, when you get your applications, are they open to public scrutiny when you get the complete applications? No.
No, because
so we don't want
income tax are attached
right,
to that.
Right.
Yeah,
okay.
So it's never been. But I wasn't sure, like when we compile data.
Well, I think the numbers are okay.
The numbers.
Yeah, the numbers are fine.
But as long as we're not giving names and that type of information.
Mm-hmm.
Okay.
All right. And are all of our meetings considered special meetings?
Yeah, I would.
Okay.
Yeah. You can, well, there's a debate. You can file, I don't know if you have, but you can file a notice schedule. And then I think that there's some FOI cases that say that that's okay at that point. They're not special meetings. But middle of the year like this, I think you're better off treating them as special meetings to be safe.
Okay.
But you should file a schedule anyway if we're going to meet at a specific. But I didn't know if we were meeting on specific dates.
I don't think we're. I think at the end of this meeting, we'll probably figure out when our next meeting is going to be based on everybody's calendar and move it along like that from meeting to meeting. You know?
Yeah, well then it's basically
then it's going to be special meeting.
Yeah, all special.
So, all right. And can you just give a little brief history of the abatement?
Well, this program went into effect in 2001, and it was revised in 2007. I gave everybody a copy of the current ordinance. What was revised in 2007 was just some housekeeping issues, and those were the fact that I couldn't remove the benefit if the house sold or transferred. So if somebody died or the house sold and there was a $4,000 benefit on there, the new owner got that benefit for the rest of the year. And the change to the ordinance was it allowed me to take it off as soon as the house sold and the person passed away on the next installment, which is reasonable. And I think there was one other thing that changed.
Do you see any areas that we should consider for changes?
What I took some notes, and some of these notes are based on what the Board of Finance feedback came to me at their meetings, not just last year, but for the last several years. And I will admit that I was limited on my time to devote to some of this, and I didn't think it all should come from me. That's why I asked that there be a review. I think we need to look at asset restrictions. We have a number of people that have more than one home. They may have rental property in Danbury or houses in Florida. I think that we need to look at that, because if you look at the numbers from last year, the one sheet paper where it says the program limit, you can see that we've come close, especially back in 2011, of maxing out the program. Now, if we max the program out, what will happen is I will have to prorate everybody's bill, and then your neediest people, the people that fall in the neediest range, would lose some of their benefit because it would have to be prorated equitably. And I personally don't want to see that happen. The other thing that I think we should look at is, I had this come up a while ago, last year. There was a guy who subdivided his property. He had a large home, and when he subdivided his property, he had a carriage house on there as well. And he was downsizing. So he was going from the large home to the smaller home. And he could not take the benefit with him. He lost it. And I kind of think if somebody is a resident of Bethel, been a resident, made all the qualifications, we should be able to transfer that
So
benefit to.
similar to the last change where if the house sold during the course of the year, the benefit wasn't transferred to the new owner. Here he's leaving or selling his old home,
Right.
going to a carriage house in Bethel, or going to another home on the property or somewhere in Bethel. He
Right.
should be able to transfer his credit.
Yes,
without
that's
losing.
what I think. I mean, like, if I was to sell my home and downsize to a small condo, you know, I'm still in Bethel. The reason I'm downsizing is probably to make things economically better for myself. Then, I don't think you should be penalized for that.
Okay.
And these are just my thoughts on what I see with people. And John, you may have some because you see the people as applicants.
Yeah, I see it as applicants. I think looking at those with business income is probably something that's worth looking at. Because clearly, I think the tax code allows business income to be, in most cases, zero or a negative number. And that could be shielding a huge amount of income that is really affecting their ability to get the tax benefits.
So right now, just so I understand it, Social Security, if it's not taxed at all, gets added back into the calculation.
The full Social Security
Right.
gets
Okay,
included.
but if you have a business, a Schedule C, that has $10,000 in income but winds up with zero, that $10,000 doesn't get back.
It could count as the zero or a minus number, which for the
Right.
purpose of the program counts as.
Does any of the towns consider it differently, like this?
The only thing we do include back is if you have depreciation income in the business
Okay,
income,
yeah.
that gets added back, but usually that's not enough to change anything.
Right.
Okay.
And I think some of these are legitimately very small businesses, but I think some of them, just from the gross numbers that I'm looking at, are large businesses. And yet, with the shielding effect of taxes, you can get it down to the point that you really are conceivably in the lowest income bracket.
The same thing would happen with real estate. You have the rental income and then you get all the
Yeah,
expenses. And
absolutely.
Yeah.
Yeah.
and in that case, you add back the depreciation too?
On the rental income, yes, for the state level, and we match the state.
Right.
Okay. All right.
So we have to, that's the only difference between, well, I shouldn't say it's not the only difference. There's a few differences between the state program and the town program. And we mirror most of it, with the exception of the town program says that it has to include all income. The other thing that the town program says is that it's based on the parcel. So if somebody has a 2-family house, they can only get the benefit on the half of the house that they're living in. So a 4-family house, you divide it by 4, and a 2-family by 2. Also, if somebody has a house on 17 acres, they don't get the benefit on 17 acres. They get it on the house and the surrounding property.
How much? Just, is there a limit?
You know what,
to how
I
far
get
it
it, I get the amounts from the assessor. I think it's around 2 acres or 2.5, it's whatever the state allows. She gives me the numbers because obviously I don't do assessments, she does. She would give me the numbers of what she would qualify someone for on the state program.
I think they do it by lot, and they
Right.
look at our zoning.
Right,
So if it's a
Yeah.
2-acre zone and you've got
right.
10 acres of land, you're probably gonna end up with a house, and the lot would be considered 2 acres. If it's if it's an acre zone, it'll probably be considered 1 acre. I think that's, if I
Right,
remember
I
right.
think that's what she does,
Mhm,
yeah.
mhm.
But if you have somebody that has multiple homes, you know, on the property, which some of them do, they have garages that have been converted or another house, they only get it on the one house. And that's the difference. The state program doesn't care what you get it on. Whereas I mean, the acreage is the excess land is an issue, but not whether it's multifamily.
Okay. All right.
And one I would mention that this is a relatively small one, but it just, we are totally consistent with the states when it comes to the state program, when it comes to veterans with disability income. I personally wondered about that because for federal tax purposes, you do not have to show disability income on your federal or your state taxes. So really, it's relying on the honesty of the person coming in and saying, I get disability income. And I think that disability income, in my judgment, is there for a particular reason.
Mhm.
And having it included as part of the income of the person is getting, you know, kind of belies what the person with, particularly those with severe disabilities, are going through. So we are consistent with the
It
state.
seems like, I mean, it's something if they don't admit to it, we're never gonna find out,
Absolutely.
you know?
And you have two categories of people. You have people that come in that tell you everything,
Everything.
absolutely everything. I won $15 on a scratch-off ticket, here's a copy of it. And then you have other people that come in with one little piece of paper and that's all I have, is my social security statement, and I have nothing else.
Right.
So, you know, and they have the right to do that. I mean, they have that right because they're telling us that they're providing us everything. There's no way for us to go backtrack them. But I do think if they have an income tax and they file an income tax and they have more than one home, I think that that's my kind of pet peeve, because we're trying to keep people in Bethel that live in Bethel and should stay in Bethel. And if you can have homes many other places, Florida, California, whatever, you should be able to pay your taxes.
Other towns do it that way? Or do they do it
Yes.
the way we do it?
Other towns, well, I've been trying to get some information on who has access restrictions. Most towns are not as generous as the town of Bethel. I actually pulled up a couple today, and I really need to read them over before I give any
Okay.
information. But
I mean, you talked about the homes, all right, multiple homes. What about 401ks? What about just investment accounts? I mean, someone could have $1 million, but they're not touching it, they're not selling stock or
Right.
funds,
and
and yet they may qualify for.
I think one of the things that probably is influencing the number right now is that those with IRAs, traditional IRAs, are not required to take distribution until 70 and a half.
Right.
So for income purposes, there's a window there from 65 up to 70 and a half where the income is far less than the asset base.
Mhm.
When the asset base finally kicks into required minimum distribution, they suddenly fall off the program. So we'll see them fall off, you know, those with large amounts.
Portfolios, yeah,
Portfolios,
yeah.
yeah.
But, you know, when you look at the number of applicants, qualified applicants, I mean, it's been pretty consistent. I mean, it's gone down a little bit, you know,
It's going
from a
down.
high of 320 to 288. You know.
It's gone down because you will see that we stopped raising the income limit. Because back in 2011, when we got very close to going over what was 0.75% with that of what the program limitations are, I stopped asking. Plus, I had, and this is just my feeling, I'm a town employee, the $48,000, there are many town employees that don't make that $48,000 here. And I think there's an unfairness in that when you have people that work every single day, very hard every day, that this benefit is supposed to be for the low income. So then what is it? Are our employees all low income? You know, plus it was gonna push the program so far.
But at the same time, you have to be 65 to qualify for this to begin with. And,
Yeah.
you know, maybe some of those employees are 40s or in their 50s. You know.
I don't know, I have one in my office that's not there, so, and is well over 65.
For the statistical side, each year I've been including those that come in. So admittedly, I miss the ones that don't, realize they're over the income limit and don't make application. But for those that do, I've been recording individual income levels. So you get some idea, well, the 48,000 hasn't risen in the past couple of years. You could look and say, well, if we took it to 50, what would the difference be? And you can actually see the numbers, at least that applied. Now, again, that does not account those who look at their numbers themselves. A lot of people don't know what they make. So they come in, I mean, you can see some instances where it's well over $100,000. But those that do come in, and I take the actual income that would be included in the town program. And so you can see what raising the upper limit would do.
When you say they, first of all, they don't understand how much money they made, but then they wound up making 100,000. That's on the tax return, right? Or
Yeah,
yeah,
but they don't know how to come up with the numbers. A lot of them, it's just they pass the papers to the accountant, the accountant does it and hands it back to them, and they say, geez, maybe I can have a tax benefit here.
Okay. All right. Bob, any input? Any ideas?
I just have homework to do. It seems like income and qualifying income is an important concept, and that's defined in the Connecticut statute. Residence is a defined term. I have to do some homework there.
Sorry, Bob, I'm not hearing you.
Oh, sorry. I was just saying, John, I just have homework to do.
Oh,
It sounds
okay.
like based on your discussion, income is an important concept, but it's a defined term in statute. So that, to me, I have to look at the statute, but it's probably just whatever the definition provides. Also,
Just so you know that the income that's in the state statute is different than our income. That top tier on the program, the 48,000, that last tier for 10%, that's the town's income. That town sets that. The rest of it follows the state guidelines.
the Chapter 98 taxation, is this the town? Or
That's
is this
the town's ordinance, current ordinance.
It refers to the Connecticut statute to
Right.
define income. So there shouldn't be any differences.
It does, except further in.
Was it 12-129C, I think? Is that the income one?
If I understand what Ann is saying is the town has something that would say paragraph G doesn't by itself define income.
Right, the town includes taxable and non-taxable income. The state program only includes taxable income.
I'm sorry, Ann, you think somewhere in this, I haven't read this whole document, so I may have missed it. You think somewhere in this document, it provides the differences between the town and the state?
If you compare them both, the state program is only based on taxable income. So the assessor gets in the income tax, somebody's income tax, and whatever is on there is what she uses. We also use the Social Security, which is not taxable. So we have to add the Social Security. The town program is taxable and non-taxable income.
What about non-taxable interest and dividends?
On the town program that gets included.
Yeah, but if they don't put it on page 1 of the return, they only give you page 1 and 2, right?
No,
Well, they usually bring in the whole return.
we get the whole return, because we have to add in the income that's not included on the return.
But maybe some people may not understand that they have to put the non-tax, especially if they do it themselves. It's non-taxable, I'm not gonna put it on the return.
Right.
And it has no effect on the return, except for calculations of if their income is big enough for itemized deductions and.
We ask them to bring their income tax and their supporting documents so that we can look at them.
So you would see a brokerage statement?
Yeah.
Okay.
Yeah.
But I think that's another area of my homework. I think H says proof of income is as provided under, again, another Connecticut statute.
If it's an income tax return, we have the ability to match up item for item with the tax return. If there's no tax return, we're trusting on the person bringing in their tax documents and bringing them all in. Now, I would question if it was something that was on last year in terms of an income item for a non-tax preparer that isn't on this year. Want to understand what happened to that piece. Did you use up all the IRA distributions? Did you stop getting this for some reason? It's a pension or something, it's a little bit more probing because usually those are for life.
Yeah, it's consistent from year to year.
Yeah. Not necessarily.
But
Well,
if-
I
We
mean,
still
it
have
could
to
be a
come,
10-year payout or whatever, yeah.
But if we see someone go from a 10% bracket down to a 60% bracket, we're gonna question it. What changed from year to year? You know, how'd you get down to 60% when you were at 10? Or vice versa, you were 60 and all of a sudden you're up to 10%, or no, or not even qualifying. You know, we try to make sure that we cover it on both sides of the fence, so that, one, people get what they're entitled to, but, you know, there's also that abuse of the system. You have to.
Okay.
The other piece that probably needs clarified is there is a benefit that gets included in the tax for the town that is funded by the state. They have lower income levels than the town does. So there are fewer people that qualify for the state portion. In reality, I think most people's perception is, well, you know, if I lose the state benefit, or, you know, it's important that I get it. It really has no bearing on the tax benefit they get. All it does is if they qualify for a state benefit, the state gives them a portion of what the town is giving them in terms of a total tax benefit. And the number is not insignificant. The past year, Ian has it on her sheet, it's $123,664 of state benefit, which is not reflected in the numbers that we're showing on our exhibits for the town of Bethel.
Right, and this year it was.
I have the number
Yeah,
this
that
year, it's
was
about the same thing,
last
123, 139.
Yeah, 123, 139.
And you'll see sometimes differences between Ann's numbers and mine, primarily as a function of during the year, we have people pass away and the benefit gets taken off. And
Right.
I have not tried to go back and reconcile with the changes that occurred during the year.
I see, okay, okay. All right. Marty, what do you think?
I was interested in what Ann was talking about, and I'm trying to figure that out, that when they own other pieces of property, you said they slip in, how do they, you know, if I have a house in Danbury and I got a house in Bethel, you know, I'm not sure I understand
Well,
what you're trying to drive
right
at.
now, you can have two homes.
Yeah, no.
Yeah, right now, you can have a house in Danbury, you can have a house anywhere you want. The state program, if you're getting a benefit somewhere else, you should not be getting it in Bethel. If you're getting it in Florida or somewhere else. We do have a form that we ask if they own property anywhere else. Some put it down, some do not. You know, it depends on how honest the person is. And some don't even look at it. I don't think some probably don't even know what the form means, you know, but we have had, I mean, I had one woman recently, I think it was 2 years ago, who had a home in Danbury, and what happened was we didn't know she had a home in Danbury. She never reported anything. But this Danbury called us and said, she's trying to apply here, but she lives in Bethel. And I said, oh, I didn't know she had a home in Danbury. So she says, well, she's applying in Danbury. So I said, okay. So I wrote her a letter and I said, we're going to take you off the program since you're applying in Danbury. Well, what happened was she actually never lived in Bethel. She had a house in Bethel that she rented. She lived in Danbury. And that particular year, it was going to be more lucrative for her to get the benefit from Danbury. So
But it didn't show anything on her income tax return that she was
Okay.
getting rent from Bethel?
if they don't provide it, no.
And so that's right.
So she didn't put it on her income tax
No.
return? Well, you know, I was looking at your definition of residence here. You know, maybe you could add something to it to try to stiffen it up. You know, find out where do you vote? Where's your driver's license operating out of? That way you're gonna find out. Most people, if they consider themselves a resident of a certain town or out of state, a certain place out of state, they're gonna change their registration on their vehicles or their, I
Well,
should
you
say.
have to remember though, Marty, we are still dealing with the elderly, and some of them are, you know, like for instance, I have some that
Sound like
all,
some of them are pretty sharp.
well, some are pretty sharp, but a lot of them, all of their paperwork goes to a son or a daughter because they're not capable of taking care of their own paperwork anymore, and they have a family member. So I can't always rely on a social security form or something like that if there's a family member, you know, because mom's not quite there anymore, you know. So sometimes, you know, you don't want to, you want to make, I think we need to be careful because you don't want to penalize the person who really needs it.
Well, I'm not talking about the fact that if they want to commit a fraud, I mean, that's up to them. If they don't want to file their income tax returns, we have to abide by what's on their income tax returns. All I'm saying is that if you do have this situation going on and you're aware of it, then change the definition of principal residence. Ask them, you know, you could leave what you have or what's indicated on your license or where you're registered to vote. That way you know. It's helpful.
In that particular case, the return address was a Bethel address?
She had everything in Bethel. Everything was listed in Bethel. She got mail there. She had everything in Bethel. And what happened there is the mother was elderly, and the daughter ended up calling me very angry that we took her off of the program because what happened was then she decided, oh, I will stay in Bethel and apply in Bethel, and was angry that it was too late to apply in Danbury by the time I wrote the letter. She was angry because, and I was like, for years you defrauded the town of Bethel and you're mad at me because you're off the program?
Well, one of the things in the ordinance says that you have to be in the town for six months and a day.
At the end of the year, yes.
Yeah. but
So,
you-
I mean, I assume that that's what the address was on the return that she presented to you.
Yes,
Yeah.
yeah. I mean, there's no way sometimes to prove that, you know, but yet I've had other people that have addresses that are in the city, in New York, you know, because the daughter's in New York and she takes care of all the bills and she takes care of filing everything for the mother or father or whatever, you know, so, you know, it's just one thing you look at. I mean, trust me, John and I, we've gone by and knocked on doors. John is very diligent and stuff, you know, so there are some things. I honestly think that it should be principal residence. I don't know if it should even be 6 months and 1 day. I mean, I think if you live in Bethel, you know, I mean, a minimum of 6 months, but, you know, someone who goes to Florida for 6 months or 8 months of the year, I don't think should be entitled to a benefit here.
And they're not. According to this document, they're not.
It shouldn't be.
Right,
I
right.
mean, to me, it
Yes,
seems like,
yes.
like,
You're
to
right.
your point, and
I
we
guess
don't want to
I'm thinking
unjustly punish folks.
Right.
But we have this says you have a responsibility to the town as well, to apply its laws.
I'm thinking of the multi-home owner, I guess, more than someone who just is in town the whole year. You know, because, you know, there is an unlimited time if someone's in a nursing facility. So if someone's in a nursing home and they're no longer in their home, but the way the state statute reads is if their intent is to go home. If their intent is to return home, you still have to give them the benefit. So if they're not like a permanent resident of Bethel Healthcare, if they're there and they're there for a year more, but their intent is to someday be rehabilitated and go home, they are still entitled to the benefit under the state statute.
Just one other clarification. In terms of applications, I always have the current year income tax filing requirements. And depending on the person, whether they're single, married, and their particular age, determines if they are at a level of income that requires an income tax return to be filed. I don't take an application until they provide an income tax return. So it's not a case of walking in and say, oh, what I have it to base on is the documents they have. Oh, I don't need to file tax return, but if I have documents that say you're above the limit this year, you had to file, and I just send them, tell them to get an appointment down in the senior center and get the free tax return. But we don't just allow them to say, oh, I didn't do a tax return. They have to be within what the federal government says is the minimum for filing a return.
So the one benefit that Bethel does have is John Sarver, because prior to John, I met with people individually, and the assessor's office met with people individually. And we had people that would come either to the assessor's office or my office. The problem with part of the local benefit says you have to apply for the state program first in order to apply for this, whether you qualify or not. Because if there's qualifying money there, it offsets what the town has to put in. So what happened before we had John is we would have people that maybe came in to see the assessor and never came to me. And no matter how many letters I sent them, they felt like they applied because they were here. They didn't know they had to go to 2 places. So John has really been invaluable, and he's keeps such great records that we're able to look at some of these statistics that I would not be able to provide you because I don't have time to do that.
Okay.
You know. So.
All right, so there's a couple of things I guess we can start out with is the asset restrictions. Look at that. I guess for multiple homes, either within the area or outside of the state of Connecticut. And then also, I'm wondering whether or not we should have an asset restriction if there's the portfolio was over $1 million, even though they're not drawing against it. I mean, the money is available, and they're really taking a benefit away from someone else that should qualify maybe.
Well, and I think we have to keep that in mind that this money that for the program is at all the other taxpayers' expense. So we need to be thrifty with that so that we're not, one, taking it away from someone, but even though we haven't maxed the program out as of yet, it's still taxpayer money that's paying for it.
Exactly.
So.
Yeah.
We keep all the applications for a couple of years for the just completed tax year. It wouldn't be a problem other than just going through them to identify those with multiple homes or rental homes. How many of the population that are getting a benefit have rental homes? How many are business owners? And from the sheet that we haven't filled out, those who say that they have property elsewhere could have that. The assets, I don't know a way of coming up with that one because there's, if they have something that's being generated within an investment account that has the tax information along with the investment value, that would be available, but otherwise.
Well, if they've got interest and dividends on the tax return that you're looking at and you ask for the supporting documentation, which would be a brokerage statement.
No, it'll be a 1099.
Well, maybe we should change that to a brokerage statement, something like that, just to see, because on a brokerage statement, you're gonna see, the accrued value of the investments.
You can pretty much calculate how much dividend is.
I'm thinking
Where you have
IRAs or Roth
stocks
IRAs and those things.
and figure out how much the dividend yield is, and, that would add a lot of time to the process.
Yeah, it is. It would. But I do think.
But I think the other part maybe is to look at the surrounding towns, Richfield, Reading, and Newtown, and Brookfield, and see how they do it too. Do they take into consideration asset restrictions on portfolios?
I will put out, now that the craziness of July has ended, I was reluctant before to put out anything to my tax collector email tree, but people may find the time then to respond. I will ask. You don't always get a response, and it's like today I tried to look at the surrounding areas charters to see if they had anything in the charters, and 40 minutes of clicking, I only found one that had their stuff in there,
Mhm.
or even had their charter online, so.
Okay.
It might be there, it's just a matter of trying to find it,
Right, right,
you know, to see what they have.
okay. Well, let's start out by doing that, you know, and we'll probably need at least a month to review the information we have and just to try to get that information from the different towns.
Yeah.
And then, you know, language in the ordinance as far as downsizing. You know, in the case that you talked about the carriage home and all, I mean, that only seems like it's an add-on to what you did back in 2007, and it's only a
Right.
fair item to do, rather than have the person, you know, if it's not in a carriage house and then they're buying a condo for a lesser value of what they're selling, they should get the benefit.
Right.
Even for half a year.
Yeah, I think if we know that the person, I mean, we'll know they've been a resident, they've provided the proof, they're getting the benefit, I don't see why it would be hard to move it from one to another parcel.
Mhm. Mhm.
We'd have
And that
to,
would just be a
we would
language
have to
change,
figure
right?
out how to do it in terms of, right now, it's based, the percentage is based on the tax, well, I guess we could still do the same percentage. So if you qualify for 45%, you would still qualify for 45% on the new residents.
Mhm.
So, yeah, all right, that makes sense. Was overthinking. Overthinking that a little bit.
Mhm.
I've said to Ann, as we think, each time we come to the end of the year, we say, well, what's
We should be
likely to
doing this,
change?
we should
And
be
then-
doing that, yeah.
No, more, what's likely to change the numbers dramatically?
Right.
I think I've been less concerned about new properties in town because with several developments, there could be people that fall within there that would qualify for the benefit, but that also is increasing the tax base. So that would not be just a pure outlay.
That would, to me, it would be kind of odd. You're buying a $700,000 home and you're going to qualify for a tax abatement?
It's not the first time. No, it's not.
They spent all the money on the home?
You know, I mean, mom doesn't always own a home. You know, I've seen a lot of places
But
where
then that's something
homes
else, but how do you
transfer to
control
a
that,
kid's
too?
name, and then they get a great big mortgage, and then mom's back on it again and getting a benefit. So, but mom usually never comes completely off. She might be a 50% older or something until a mortgage is got, and then it comes back into mom's name. You know, I mean, I have people that the taxes on the property exceed their income. We've seen that many times, and there's no law that says your kids can't help you.
Mhm.
And, you know, I mean, that's
As
the way
part
I
of
helped
what-
my own mother.
You
so
asked for any documentation? I mean,
If some have,
I mean, coming from the IRS, is there a
Yeah.
trail? Do you have a check?
if there's
That
some that
runs the
have too
parent.
little, it's typically the kids are providing funds
Right.
Yeah.
or, so.
Well, the other thing is that I don't think they'd be doing that. I'm sure there might be a couple that are doing that to qualify for benefits from the town, but I think they're more looking at long-range elderly care planning because they want to get it out of mom's name or as much as they can.
Yeah.
So
Yeah.
if they can apply for Title 19, so I think that's probably part of it. And, you know, that's a strategy you could use. You could tell your mother to go out and buy a $800,000 house and sink every penny she's got into it, especially if there's another spouse, and then transfer it to the other spouse. And so there's a lot of things.
If there's interest in the net assessed value of the houses, that will all change this upcoming year. But for
Well,
the
yeah,
past couple of years,
I'm not sure what impact Revell will have on it. I mean, we've been through Revell before with the program, and it has, you know, it kind of evens out, you know.
but you can very quickly just look down the summary of what are the individual things that make up the program expenditures this year and see the net assessed value of all the houses. So
Yeah.
When you talked about, you know, the taxes are more than the income that's on the return, how often does that occur? Is it just once or twice, or is it frequent?
usually there's a history of, okay, the daughter is providing funds, or the question has been asked in prior years. And
Yeah, I'm not saying from year to year to year, I'm just saying in a particular year,
How many
how often does it happen?
I can give you that. That's easy enough to come up with.
Yeah, I wouldn't want to guess at some of those numbers, Bob. You know, I like to know what my numbers are
Okay.
without guessing them,
Okay.
but we do see it.
All right.
John, and it seems to me our goal is to try to find the balance, right, that gives the credit to the folks who genuinely qualify for it, while kind of putting a control in place to stop gamesmanship. And folks who are just trying to get around it. You just, in your gut, I mean, do you think we have vast majority of kind of genuine compliance?
I'd look at the summary that I had and look at if I'm understanding your question, the vast percentage of the dollars are going to those making under 29,500 this year. You know, there are people that are getting a benefit above that, but in terms of actual numbers and particularly the percentage of dollars that are being devoted to the benefit, falls off very dramatically. I mean, this past year, it was like 14% of the dollars got applied against those who had income of greater than 35 too.
Mhm.
Right.
So it is going against the lower income base, which I think is the ultimate goal, is to,
Right.
And those are the folks, presumably folks who are really struggling, not
Yeah.
folks who have kind of gamed the
All you
system.
have to do is look at the income limits and you know that they're struggling. And, yeah,
I can describe the person very clearly. A person in their 80s who believed they did everything right. They had Social Security, which was going to go up, and I'm not talking reality now, the perception. Social Security is going to go up 4 or 5% every year. I have savings of $10,000 and I have a CD that's giving me 7% money, and I'm going to be
Okay.
good for life.
right,
And none of that's true anymore.
absolutely.
So those are the ones you really feel for, because
Sure.
there's a bunch that are, well, you can see 13% are under 17.6.
Okay. All right, so why don't we start with trying to look into the asset restrictions
Okay,
and plan for maybe a meeting in, I guess, after Labor Day? Because we're probably gonna need at least a month to canvass the
I would
towns.
say, I would say.
Do you want to keep it on Thursday?
Is that okay for everybody, or doesn't matter that far
I don't
out?
have any other meetings.
Thursday at 4, or what? What
Yeah.
works, 4:30, 4?
Is 4 good with you, Bob?
Oh, so probably 4 o'clock's okay?
Yes.
Is Bob 4 good with you?
I also had that I was going to pull out the number of multifamily homes in town,
Okay,
rental income, and those that are included business income on their applications.
okay, good.
Now, are we going to set a meeting schedule? Would that be the first
No,
Thursday of every month, or are we just?
Well,
looking
I would
at
I would just say right now, maybe we shoot for the 7th,
Okay,
but not make it consistent the first Thursday, because, you know, if there's
Yeah.
a need for only maybe 2 weeks, we can do it then.
But we can do that and say it's the first Thursday of every month, but then we can just change it whenever you want.
Okay.
That way, if somebody wants to know, they at least have an idea. I think.
I mean, that's fine with me if you want to do that.
Yeah.
Yeah, why don't we make, do you have a problem with that? I mean, that way, that's what we're shooting for,
first
but if we
Thursday of
don't
every
meet,
month.
we don't meet, you know,
Okay.
then we just do the special meetings.
and it will be a special meeting?
Special meeting, yeah.
Okay.
So let's plan on the 7th right now.
Okay, that sounds good.
Meeting room A, okay.
Yep. Mhm.
So I'll put a calendar with
I know
meetings
it's a month
together
away, but-
also.
Boy, I already have a lot on my calendar in August, so I hope I can get some of this stuff done. Like, where's that?
Well, I mean, if it turns out that the first Thursday is not good for you and you think you have it ready by the 2nd or 3rd, I mean, like Marty said, we just push it off.
Yeah, I'll touch base, yeah. I mean, hopefully I can get some responses back. And some of that depends on getting responses back from other tax collectors, so we just have to be hopeful you get answers back.
Okay.
Why don't we make a motion that, for the rest of the year, that we schedule the first Thursday of each month?
Make the motion?
Yeah, I'll make the motion.
I second that. All in favor?
Aye.
And that way, if we can't meet, then we just change it,
Right.
cancel, we do special meetings.
Okay. All right, sounds good. I guess with no other further business,
I'll make a motion to adjourn.
second? All in favor?
Right?
Aye.
That's always unanimous, that one.
John, who knows the number of the amount of people on Operation Fuel in Fairfield? Who would know that? Social services? No, but that's, you guys have source?
Nope. Posting program that would so